How's it going, everyone? This is Daniel. In this video, we are going to be talking about SOFI stock. We're going to go over in detail, go over exactly some of the news that came out for today. We have some company insiders selling SOFI stock, so we're going to be talking about that. We're also going to go over and listen to the CEO of SOFI going over exactly their current earnings that came out a few days ago. We're also going to be talking about the best stocks to buy in November that could potentially have a rally for the end of the year. So we're going to be talking about all of this important information in this video. So make sure you stay tuned. Now let's get right into the video. So as I mentioned, we're going to talk about the elephant in the room, which is we have insiders that are selling SOFI shares. So we have SOFI Chief Risk Officer Aaron Webster is dumping SOFI stock. Yes, the headline might seem that he sold a lot of shares, but when you look at it, he only sold $1.74 million worth of shares, so it's really not that bad. So it's around 216,000 shares. We also have SoFi Bank President Chad also sold 152,000 shares worth 1.21 million. And the most important thing is the stock is up by more than 65% this year. So when you look at SoFi stock, we talked about it that the stock has performed very well. We have on Q2 earnings, we hit around $11. We pulled back. And even the earnings that we got a few days ago, the stock went from $6.87 to around $8.50. It touched around $8.50. And it's really, if you're somebody that is holding, if you want to lock in some profits for the year because the stock is up like 64% for year to date, it's a good time to lock in your profits before the end of the year. If you're somebody that was holding for a while, if you want to lock in some profits. So I really don't see that it's a big problem that they sold some of their shares because they're up pretty good. So locking in profits, it's really not that bad. And when you look at also some of the total amount of shares that they own, for example, Webster still owns 476,221 shares. So that is pretty good. And we also have the president, Chad, still owns 157,857 shares. He still owns that amount of shares. So they're still invested in the company. They were just locking in profits. So when you look at the price action, of course, we were talking about the earning before the earnings, it could potentially go to $8. We hit $8 and we actually touched $8.50 a little bit, $8.48, and then we pulled back, unfortunately, to the downside. We also had this news that came out that was slightly a little bit bearish. We have the overall stock market that have been trending really aggressively to the upside. We see SoFi stock selling off a little bit in spite of the news. But let's go over and talk about exactly what they said in their investor presentation. So for Q3, so when you look at some of the numbers that SoFi exhibited, it's really fantastic. If you guys want to see the detailed breakdown of their Q3 summary results, you can go to SoFi website and check it out. But just to go over some few of the slides, as you can see, the Q3 2023 summary results, we have, as you see, record new members additions of 717,000 in Q3, bringing the total to nearly 7 million year to year. So that's pretty big. So as you can see, Q3, they're still growing aggressively, which is fantastic. The users are really important. We have record new product additions of 1.05 million in Q3, bringing total to 10.4 million. That is really fantastic. And also accounts total 137 million, 10% year over year. For Q3, it definitely ticked up. That is fantastic. You look at it, the lending products, it's gone up. Financial service products, it's gone up. And you can also see some of the detailed breakdown over here, but let's go over and listen from the CEO because it's definitely important to look at exactly what CEO, what they're expecting for Q4, when they could potentially hit profitability and etc. But he didn't mention those things, but he went over some of the important things that people are missing when it comes to SoFi, because a lot of people were anticipating, okay, student loans are back, so SoFi could potentially be taking a massive advantage of that. But he went over and talked about exactly, that's not the big generator of revenue for SoFi. But let's go over and listen to the CEO, and then I'm going to come back, and then we're going to talk about some other stocks that are important to watch for the end of the year rally. So first, let's check out the video.
Let's get to SoFi CEO Anthony Noto joining us in a first on CNBC. Always good to see you. Student loans, at least the analysts seem to be a bit short here in terms of what they anticipated. It may have come in, I think on the call, you sort of seemed to indicate you expected that that surge. But tell us a bit about that and what you're seeing there, whether it's the cadence. Is it a one-time thing, Anthony, and it gets back to normal, or is there going to be significant demand for these loans for some time?
Yeah, so David, I think there's just a misperception that student loans were a big driver in the quarter. They were not. 67% of our absolute growth in revenue dollars was from non-lending, so our technology platform business, as well as our financial services business, which includes checking and savings, invest, and credit card. We did see a recovery in the student loan business from about $400 million of origination volume to $900 million of origination volume, but it wasn't that big of an impact on the overall P&L, just given how those loans are valued. So the bigger driver of it was the really strong performance from tech platform and financial services, and still continued strong demand for personal loans. On the student loan side, to answer your question specifically, we think it will be a slow, steady, gradual increase over time, and that we're not going to get back to where we were in the fourth quarter of 2019, which was about $2.4 billion origination volume a quarter for some time period, probably not until 2025.
Got it. Well, on the call as well, you seem to try to focus the analysts on the technology platform. Explain to our viewers what you're talking about here, Anthony, when you say the pipeline there is pretty visible and it's the most robust I've seen. Just explain what exactly that means.
Sure. Our technology platform has a number of different products, but we're essentially providing processing, debit and ACH processing on the platform with a number of APIs that allows a developer to build just an app on top of it. It could be for a consumer-facing bank. It could be for B2B services. It could be for government payment services. In addition to that, we have what's called the core banking platform, which is branded Technisys, which is really an operating system for different products, whether it's checking or savings or a credit card or loans. We bought two businesses over the last 5 years to really power SOFI, but they also power third parties, about 135 million accounts and over 8 billion transactions a year. And so what we're seeing in a big way is traditional banks, large incumbent banks, looking to upgrade to a modern processor, which Galileo is in the cloud, as well as a modern core. And so we've, throughout the quarter, have been responding to a number of RFPs from the largest banks in our country as they're evaluating updating that technology. We're also seeing a lot of demand from other incumbents that want to switch to us that are not big, large banks, but they are financial institutions, or they have a large amount of payments or direct consumer offerings in terms of checking and savings accounts or other financial products. So seeing a nice pickup there and a need for the industry to upgrade their ability to manage assets and liabilities in real time.
Anthony, it's Sarah. You sounded pretty upbeat about the macro environment on the call. Can you tell us, first of all, you have a unique demographic that you serve, and what sort of consumer trends you're seeing so far into October?
Yeah, so I want to be very clear for the audience that SOFI is taking market share from incumbents, and so we're not really a key indicator of the economic environment or the cycle. We're a secular grower, which means we're gaining market share from an existing market, even if that market's not growing. So we're still seeing very strong demand for our loan products that are very differentiated. Our SOFI checking account, we offer 4.6% interest, no fees. You get a free certified financial planner. You can pay anybody, anywhere with your phone or debit card or P2P by just having their phone number. That product is seeing a significant amount of demand as well. And in that product, we are seeing an increase in deposits per account, which is more of a measure of how the economy is, as well as increased spending per account, as opposed to just being driven by new account openings. We're also seeing good increases in AUM. That's in our invest business. That's clearly a market share gain on the back of doing 3 IPOs. So we're still seeing really strong demand for our products. I would say more broadly, if we're going to be in an environment that's higher for longer, I'm really worried about the conditions in the financial industry more broadly, and that will cause us to be more conservative and more balanced to make sure we maintain the right safety and soundness of our balance sheet and our ability to serve our members.
Now let's go over another important stocks to watch out for November 2023. So we have Bitcoin that is right now breaking out aggressively to the upside. As you can see, it was trading at around 30,000, 28,000, and etc. And it broke out, now sitting at $35,000. So if you want to participate in the rally, if you have a continuation move by the end of the year, if you want to participate on it, if you don't want to hold Bitcoin, if you want to participate buying shares, I think a Coinbase is actually one of those stocks that can benefit a lot and it could potentially be trading above $100 if Bitcoin continues to rally aggressively to the upside. So the stock has definitely been beaten down. As you can see, it went from 114 and it's been consolidating between $70 and $85, and it's slightly breaking out to the upside. So if it continues to break out, we might potentially be going to $100 if we can continue to see Bitcoin breaking out to the upside. Another stock to watch out for also is going to be Google. So as you can see, Google stock dropped drastically because of the earnings announcement, and right now it's recovering and we have this massive gap. So if you're somebody that wants to trade technically, of course Google is also a great company to hold for the long term, but if you're a short-term trader, if you want to get involved in a short-term trade, I think Google is a great opportunity. You can definitely risk off of, $130, which is the gap over here, and it could potentially fill it. It could potentially go to $133, might potentially go back to $135 over here. So that could be a good risk reward opportunity for Google in the short term if you want to swing trade it, and if you also want to invest it for a long term too. It seems like a good opportunity to buy into Google. So that's going to be the picks for November. We have Coinbase and also Google, and also SoFi also is a good opportunity if it drops below the $7 and $6 area. That'll be a good place to buy the dip on SoFi. But let me know in the comments below, what do you think about insider selling SoFi stock and also Bitcoin, etc. I'd love to hear your opinion. If you're new to the channel, make sure to subscribe to the channel, turn on notification bell. But I catch you guys on another video. Have a wonderful day.